Is the stock market crashing? I know a lot of you have been probably asking yourselves that question. Well, let's take a look. The S&P 500 has dropped over 6.8%, having its sharpest pullback in a 3-day span since June 2022. The Nasdaq has dropped over 9.8% and has now entered correction territory, shedding over $900 billion in value. The Dow Jones fell by over 1,000 points overnight, and these series of events marked a significant downturn in global financial markets, sparking widespread concern among market participants. Now, let's put this into context. Let's take SPX on the weekly chart. If you invested in the S&P 500 back at the end of April, you are essentially almost break even right now, despite the rally that we've been having for the last couple of months. Now, this crash accelerated after unemployment data was released last Friday. Unemployment jumped from 4.3% to 4.1%. But what was more a concern was that companies were laying off more workers than expected. Wage growth is slowing faster than expected, which is creating more worries about the job market and the economy, which is further fueling the concerns of a possible recession. And to make matters worse is that you have brokerages like Robinhood and Charles Schwab. They halted trading on Monday, preventing traders from exiting or even entering positions. So is the stock market crashing, and are we entering a recession? Now, before people talk about a stock market crash, I think we need to analyze historical data. Now, at the time of this video, the S&P 500 is up 5.5% year to date. The Nasdaq is up 9.8% year to date, and the Dow Jones is up 2.8% year to date. On average, the S&P 500 gives an annualized return of over 9%. Every single dip just ended up being low for the market to rally higher. Now, as traders, it's not our job to time the market. Rather, we look at the chart and look for potential indicators or signals that let us know that a potential reversal is about to occur. We also look at fundamental data or potential geopolitical factors that might be coming out soon. Well, what are some things that we can look out for? Well, later this month, on August 22nd to August 24th, is going to be the Jackson Hole Economic Symposium. And this is where Fed Chair Jay Powell will be giving his keynote speech on the topic of reassessing the effectiveness and transmission of monetary policy. And this is where investors are going to be looking for him to give the clues and the signs for the potential rate cuts that will be happening this year. Now, if we look at the S&P 500 on a chart and actually use technical analysis and technical indicators to see where price could potentially head towards, first and foremost, you were to zoom out, and you can see that the S&P 500 has been in a primary uptrend that has not been broken yet. Every single dip has led to a higher high. So with that being said, what are we looking for? We are looking for the potential indicators where the market's gonna potentially put a bottom. If you trade the strap, we're looking at possible hammers on higher time frames. If you trade ICT, you are possibly looking at an OTE or a market structure shift back to the upside. It doesn't matter which strategy you use. One thing that should give you at least a peace of mind is the fact that the S&P 500 is meant to go up. If you believe in the best companies or whichever companies you believe in, look at the chart and look at the potential buying opportunities so you can dollar cost average and buy at a great price. Right now, the market is at a discount, and the best investors are looking at this as a potential buying opportunity for the future.